Something monumental just happened in the crypto world, and it's sending shockwaves through both digital and traditional finance sectors. The news is spreading fast, and everyone from Wall Street to Main Street is taking notice. XRP, a cryptocurrency that has long been at the center of heated debates, legal battles, and regulatory uncertainty, has just experienced a dramatic shift in its narrative. For years, XRP was seen as a risky bet, with many doubting its future due to ongoing lawsuits and skepticism from major financial players. But now, the conversation has changed. The spotlight is firmly on what lies ahead for XRP, thanks to a groundbreaking announcement that has the potential to reshape the entire crypto landscape. Multiple exchange-traded funds, ETFs, focused on XRP have officially been approved. This is a historic milestone, not just for XRP but for the broader adoption of cryptocurrencies in mainstream finance. This isn't just another headline or fleeting news story, it's a true game-changer. The approval of XRP ETFs fundamentally alters how the world can interact with and invest in this digital asset. These ETFs serve as a powerful bridge, seamlessly connecting XRP to the world of traditional finance. For the first time, institutional investors and large financial entities can gain exposure to XRP through regulated, familiar investment vehicles. This development is more than just symbolic. It's a clear signal of validation from institutions that were once hesitant or even outright dismissive of cryptocurrencies like XRP. Now, financial advisors, investment firms, and everyday investors have a regulated, secure, and accessible way to add XRP to their portfolios. This opens the door for a much wider range of participants to get involved. The potential investor base for XRP has expanded dramatically, reaching far beyond the crypto-savvy crowd to include mainstream investors and institutions worldwide. As a result, XRP is now entering mainstream financial conversations, with analysts and experts discussing its prospects and growth potential alongside traditional assets. The story of XRP is no longer limited to the world of crypto exchanges and online forums. It's making its way into the heart of global finance, from trading floors to boardrooms. XRP is now part of the broader financial dialogue, discussed by experts, debated by analysts, and considered by major players in the industry. This change carries significant weight, offering the potential for long-term growth and stability that was previously out of reach for XRP. The future of XRP has never looked more promising. With new opportunities, broader acceptance, and a seat at the table of global finance, XRP's journey is just beginning. What is an ETF, and why the excitement? Let's simplify it. An ETF, or exchange-traded fund, is like a basket that holds various assets. These assets can be stocks, bonds, or even digital currencies. The beauty of an ETF is that it allows you to invest in a wide range of assets without having to buy each one individually. Think of an ETF like a pizza slice with all the ingredients. Each slice represents a small portion of the entire pizza, which includes a variety of toppings. In the same way, an ETF gives you a small piece of a larger investment pie. Instead of buying each ingredient, you get everything in one slice. This makes it easier and more convenient for investors who want exposure to multiple assets without the hassle of managing each one separately. In this case, the ingredients are digital assets like XRP. XRP is a type of cryptocurrency, and buying it directly can be a bit complicated. Buying XRP directly can be complex, involving exchanges and wallets. You need to set up accounts, manage digital wallets, and navigate through various platforms. An ETF simplifies this by letting you buy shares through a stock exchange. You can purchase shares of an ETF just like you would buy stocks, making the process straightforward and accessible. Major financial companies hold XRP securely and sell shares of their fund. These companies manage the assets, ensuring they're stored safely and securely. This makes investing in digital assets feel familiar and safe. Investors can trust that their money is being handled by professionals. ETFs bridge the gap between traditional finance and crypto. They offer a way for traditional investors to gain exposure to digital assets without having to dive into the complexities of the crypto world. They allow large investment portfolios to include XRP. This diversification can help spread risk and potentially increase returns. This opens a massive pool of money to XRP. More investors can now access and invest in XRP through ETFs. When a major institution launches an ETF, it signals trust in the asset. It shows that the asset is being taken seriously by the financial community. It changes XRP's perception from speculative to a legitimate investment. This can attract more investors who were previously hesitant. This is a significant step for XRP's acceptance and growth. As more people invest, the value and stability of XRP can increase, benefiting all stakeholders involved. One XRP ETF is big news, but multiple ETFs are transformative. Major financial players launching their own XRP ETFs signals deep interest. It's like a new coffee trend adopted by all major chains. This competition is healthy for XRP and its investors. Firms will compete with lower fees and better performance. They will actively promote XRP ETFs to their clients. Multiple ETFs create a robust and stable market. It reduces single point of failure risk and ensures liquidity. The multi-ETF launch is a vote of confidence in XRP. Financial giants have done their homework and see growth potential. This is an industry consensus shift in real time. The crypto market was once driven by retail investors. Wall Street stayed on the sidelines, citing volatility and risk. With XRP ETFs, institutional investment has begun. This shift from retail to institutional money is a game changer. Institutional investors operate on a massive scale. A small portfolio allocation can mean billions in investment. Regulatory clarity from the SEC versus Ripple lawsuit was key. Institutions now have a compliant way to invest in XRP. This influx of capital brings professionalism and stability. XRP is transitioning from speculative to a recognized financial component. Exciting news about ETFs, like the possibility of an XRP ETF, can create a lot of buzz and anticipation in the market. But it's important to remember that headlines alone don't guarantee that XRP will skyrocket overnight or make investors instantly wealthy. The reality is often much more nuanced and gradual. Take Bitcoin's ETF launch as a lesson. Many expected prices to double or surge immediately, but that didn't happen. Instead, the price action was more measured and the market responded in its own time. Often, the market prices in big events before they actually occur. By the time the ETF is officially launched, much of the initial excitement may already be reflected in the price. In fact, it's common to see a temporary dip right after the launch, as some investors take profits or the hype fades. This is a normal part of how markets react to major news. The true impact of an ETF is seen over the long term. It's about increased demand, greater accessibility, and more stability as new types of investors enter the market. For example, Bitcoin ETFs attracted steady capital inflows over time, as institutional investors and funds gradually built their positions. This slow, consistent buying pressure is what drives sustainable growth, rather than sudden, short-lived spikes. So, if an XRP ETF launches, expect to see similar patterns. There may be some initial volatility, but the real story will play out over months and years. Anticipation and speculation can cause price swings in the short term, but patience is key for those looking to benefit from the ETF's long-term effects. The significance of an XRP ETF will become clear over time as adoption grows and more capital flows in. This process unfolds over months and even years, not days. Institutional capital tends to enter the market methodically, with careful analysis and long-term strategies, rather than rushing in all at once. Remember, the launch of an ETF is not the finish line. It's just the beginning of a new chapter for XRP and its investors. Focusing on long-term growth, rather than chasing short-term hype, is what sets successful investors apart in the world of crypto ETFs. The introduction of ETFs marks the beginning of XRP's next major journey, opening doors to new opportunities and broader adoption. Ultimately, patience and a solid understanding of market cycles are essential for anyone hoping to benefit from the long-term potential of XRP ETFs. What does this mean for you, the investor? For long-term holders, it's validation and peace of mind. For new investors, ETFs offer a simpler entry point. Buying an ETF share is not the same as holding XRP. ETFs provide financial exposure, not digital ownership. If you believe in crypto's long-term vision, holding XRP is valuable. ETFs are a bridge to deeper crypto engagement. They diversify investment options for all types of investors. Your strategy should align with your goals and risk tolerance. XRP's mainstream adoption has profound implications for its future. Let's distill the noise into clear takeaways. Multiple XRP ETFs legitimize XRP in mainstream finance. This opens the door to institutional capital. Patience is crucial. Don't expect overnight price doubling. Watch for consistent inflows as a success indicator. Monitor which institutions launch these ETFs. Big names carry weight and influence. Pay attention to the narrative shift around XRP. The journey for XRP is just beginning. ETF approval is a milestone, not a destination. It opens new possibilities for XRP and its technology. Stay informed and prepared for what's to come. XRP is now a key part of the future financial conversation.